Wednesday, March 27, 2024. Our colleague, Trustee Ahuna, will not be joining us today, so he is duly excused. But present here is our committee vice chair, Luana Alapa, Trustee Souza, Trustee Aquina, Trustee Galuteria, Chair Hulu Lindsay, Trustee Trask, and Trustee Akaka, as well as myself, giving us the quorum for the meeting. Also help supporting us on in person and virtually is Karina Kina and Melissa Winahan. And joining us is our Pohana, Stacy, and I will turn this over to Pohana Stacy to introduce the other staff supporting us in the meeting. Pohana.
Mahalo, Chair, Vice Chair, Trustees. Joining us today for the RM meeting is Chief Financial Officer Ramona Hink, Endowment Director Ryan Lee, Interim Corporation Counsel Everett Ota, Information Technology Manager Tiger Lee, IT Systems Engineer Administrator Kelsey Wade, and Financial Analyst Grace Chen. Mahalo.
Okay, thank you, Stacy. We have I'll move on to the approval of the minutes for February 21st, 2024. And I am under the impression we have no oral testimony.
Zero registers to testify on this item.
Okay, so with that, can I get a motion to approve the committee minutes of February 21st, 2024? Trustee Aquina?
Yes, I so move.
It's been moved by Trustee Aquina, seconded by Trustee Lindsay. Any changes to the minutes, members? Hearing none, can I get a roll call vote for its approval?
Trustee Ahuna is excused. Trustee Akaka?
Aye.
Trustee Aquina?
Aye.
Trustee Alapa?
Aye.
Trustee Galataria? Trustee Lindsay? Trustee Souza?
Aye.
Trustee Trask?
Aye.
Mahalo, Chair Waihe'e.
Yes.
8 yes, 1 absent.
Okay, the minutes are approved. As we have no unfinished business, we'll move on to new business. Presentation by auditors. Is there anyone signed up to testify on this?
No one's signed up to testify.
Okay, so now this is our draft financial statements, and I will turn this over once again to our Pohana Stacy Ferreira.
Mahalo, Chair. At this time, I'd like to call upon CFO Ramona Hink to provide us with a presentation by the auditors.
Good afternoon, Chair Waihe'e, Vice Chair Alapa, trustees and colleagues. I would like to ask the Poon Group and Resources Global Partners teams to please turn on their cameras. Aloha. To present the Office of Hawaiian Affairs and Single Audit Draft Financial Statements for the fiscal year ended June 30, 2023, I would like to present Sophia Kuo, Assurance Services Director, and Kenneth Poon, Managing Partner of the Poon Group, LLP. Also present is Resources Global Partners team that OHA engages for all our accounting needs. There is Wayne Tomita, who functions as our controller, Sylvie Chen, our accounting manager, and Shari Kim, our accountant. They ensure our accounting books and records are accurate and complete for OHA, our commercial properties, and our federal grants. I'd like to turn this over to Sophia now, who will present the draft financials.
Thank you, Mona. Again, thank you so much. Aloha, everybody. My name is Ken Poon. I'm the managing partner and also the engagement partner assigning on the job. This is our first year audit of the Office of Hawaiian Affairs here. So this is for the fiscal year ended June 30, 2023. Along with me tonight is actually the director on the job, Sophia Kuo, and she will be also presenting along with me on this for this presentation. So what we are going through today is actually going through our standard presentation, going through the scope of work that the Office of Hawaiian Affairs actually engaged us to perform. There are certain required communication under the professional standard that we would like to go through under AUC sections 260. We'll also do some highlight on your financial statement, which is we really focus on the government-wide financial statement. And also last but not least is to provide you the audit results here. So let me, if you don't mind, let me share my screen real quick. So let me make sure that you do also see my screen. So, so is that everybody seeing my screen? Great. So let's go through the next slides is actually the scope of work. The scope of work is actually the Office of Hawaiian Affairs that your annual comprehensive financial report. The other acronyms that we call it is the ACFR. So it's a full compliance with GFOA require because of the organization expend more than $750,000 in federal expenditure. We are also required to perform the audit under the government auditing standard. So therefore, you also see a report on internal control over financial reporting and on compliance in accordance with the government auditing standard. And then also because of single audit, you also see a report on compliance for each major federal report on internal control over compliance, and then the report on the CFA schedule. And then also you see the Native Hawaiian Loan Fund financial statements separately in the single audit report. Certain required communication at the conclusion level. One of the things that we would like to talk about is our responsibility under the professional standard. Since you are engaging us to perform the audit, we are here to opine, giving you an opinion on your financial statement, whether or not they are present fairly in all material respect in accordance with generally accepted accounting principle. The Office of Hawaiian Affairs it's a government agency, so therefore the Governmental Accounting Standard Board is the standard setting bodies for state and local government. So you are abided by those principles. Our responsibility is to plan and perform the audit to obtain reasonable assurance, not absolute assurance, about these financial statements are free from material misstatement, whether due from fraud or errors. We exercise our professional judgment and maintain our professional skepticism. We are not only taking your word, we're also looking at the supporting documentation. We do consider internal control. However, we are not opining on internal control. Such consideration is solely for the purpose of determining our audit procedures at year end to make sure that we're comfortable with with your numbers. We evaluate appropriately on your account, like the adopted accounting policy that you use, the reasonableness on the estimate that you use in your financial statement, and also evaluate the overall financial statement presentation. At the end of the day, we also need to evaluate, making sure that there is no substantial doubt about the OHA's ability to continue as a going concern. So, and then last but not least is to communicate with those charged with governance. That's kind of like what we do here now. Besides sending you the AUC letter, we provide a forum for you to ask us any questions that you may have for this audit. Couple of the required communications here regarding independence. We are independence of OHA. We do not actually have any independence issue. One of the things that we also want to provide, pointed out to you, we do actually have assist OHA in preparing the financial statement, which is a non-attest service under the government auditing standards. So which means that we need to evaluate our independence because of a certain threats that's been raised under the independence framework. We do actually after we evaluate everything, applying safeguard, we comply with all relevant ethical requirements regarding independence. Very importantly, your significant accounting policy are all disclosed in Note 2 to the financial statement. During the current fiscal year, you do actually implement GASB Statement number 96 subscription-based information technology arrangement, which is very, very similar to the GASB 87 last year. It's applied to the same philosophy in applying those like lease concept to subscription-based IT arrangement. As I said earlier, there are certain estimates in these financial statements, including the fair market value on your investment, your allowance for doubtful account, the depreciation and amortization on capital asset and right to use asset, the lease receivable, the lease liability, the net pension liability, and net OPEB liability are all estimated in these financial statements. There are certain sensitive disclosure in this financial statement, so including Notes 2, which is the whole entire summary of significant accounting policy that OHA adopted. Note 7 relating to lease receivable. Note number 9 is investment. Note 12 and Note 13 relating to your pension and OPEB account. Note 15 relating to risk management and contingency liability. And Note 17 relating to related party transactions. There is no unrecorded misstatement reported, so we record all the things that we noted. Once in a while, management also seek outside consultation regarding accounting, any accounting principle or auditing matters. To the best of our knowledge and management inform us, there's no such consultation. We encounter no significant difficulties in dealing with management, and then also we do not have any disagreement with management in terms of accounting treatment, nor audit procedures that we perform. Sophia, you want to take over and talk about the financial statement?
Sure. So I'll give some overview of the financial statement. Next page, please. So from the slide, you can see the governmental activities total assets at 876 million, and the deferred outflow of resources, which is related to pension and OPEB, ended with 5 million. Liabilities ended with $128 million. Deferred inflow of resources, which is related to pension and OPEB as well, $33 million, and it brings to the net possession ended with $721 million. There are 3 categories on the net possession. The first category is net investment in capital assets, which is $217 million. That's came from the capital asset net with related debt, and restricted net possession ended at $24.3 million, which came from external parties and also enabling legislation. And that leaves the unrestricted net possession ended with $479 million. The business type of activity was not audited by us. We rely on other auditors. The total asset ended with 26.4 million, with the liability 563,000, and the deferred inflow of resources, which is related to leases, came from GASB 87 with $542,000, with the net possession ended at $25.3 million. Next page, please. And then the government-wide statement of activities, which is income statement for the for OHA as a whole. The total program revenue was $21 million, including $11.3 million from governmental activities and 9.8 million from business type activities. Net with the total expenses $49.6 million. Resulted with net cost of services negative $28 million, and OHA also has general revenue, which came from regular tax revenue, and then investment related earnings, which was $63 million. So the net change in net position ended with $34 million. Next page, please. So now we will go through our audit result. So we are happy to say that we are issuing a modified opinion, which is the best opinion a CPA firm can render. That means the financial statements are fairly presented in all material respects, and all the significant accounting policies have been consistently applied. All the estimates are reasonable. Disclosures are also properly reflected in the financial statements. In accordance with AUC Section 260, if there are any issues in internal control over financial reporting, we are also required to communicate. We are happy to say that none of the items to be disclosed and discussed here. And we do have some single audit matters that we would like to discuss. The first one is on the internal control over procurement, suspension, and debarment checking, which is related to checking the vendors, whether they are suspended or debarred from doing business with federal government. And then the second item is on the internal control and compliance over financial reporting related to single audit, which is the reporting requirements due date concerns. And this will conclude our presentation for today, and we will be happy to answer any questions that you may have.
Okay, thank you. Trustee Aquino.
First of all, thank you, Mr. Chair. Ken and Sophia, thank you for your good work. Good to meet you. Appreciate this. Just a couple of questions. And my first question has to do with the item you presented last, that there were areas of concern, starting with vendors and so forth. Very briefly, what in particular are those concerns?
So for single audit, that which is federally funded grants, and then there is a particular requirement is that the organization receiving the federal grants need to make sure that the vendors that OHA or other agencies that contract with, they need to make sure that the vendors are not suspended and or debarred from doing business. And then there is a website that the local agencies can go online to search for those vendors before you actually contract them with.
So you're just pointing out this as an advisory. This is not a concern with our practice, right?
No, this is an internal control issue that the OHA that needs to go through under the Single Audit Act, under the Federal Acquisition Act. You are required to go through and make sure that you do actually have internal control to make sure that your vendor, your contractor are not debarred or suspended. So therefore, you do actually need to have an internal control in place to check their status on SAM.gov before you actually contract with your contractor.
Okay, so I understand. This is a recommendation for us going forward.
Correct.
Okay, thank you.
Thank you. Any other questions? Oh, Trustee Trask.
Could I ask you, when you went through the audit, did you look at the OHA Endowment Fund? Did you find the OHA Endowment Fund, Sophia?
Yes.
Did you find the OHA Endowment Fund? I don't see it in the data.
I think we went through all the funds, and then it's on the presentation. Maybe you can let me know particular funds you are looking for, then I can look into further.
The reason why I'm asking you the question is
Yes.
because I can't find the funds in my office. I can only find references to the endowment fund, as well as a document telling me that we hired someone to be the director of the endowment fund, but I haven't been able to find it, and I was wondering if you did.
Ramona, did you? Yeah,
Thank
Ramona,
you,
did you have
Chair
something to answer it?
I actually wanted to respond to the internal control finding over the
Excuse me. I'm asking Sophia, who is our independent auditor, and I'd like to get a response. Sophia, do you recall looking at any endowment fund? Or did you recall interviewing or speaking with the newly hired OHA of the director of the endowment?
I do remember. So I think again, we would like to see more details because there are a lot of funds might be rolled up to the same presentation. So if we can look into more details, and maybe I can give you a better answer on that one.
Sophia, my address is mililani@oha.org. I'm requesting that you send me your PowerPoint and any data you have on the OHA Endowment Fund. The reason why I'm asking this, trustees, if you go to look at Exhibit A, you'll see there, it's on page number 5, that we hired these folks to do an audit of OHA's operation in a manner similar to a private sector business. A private sector business, is that correct, Sophia? Is that correct? Was this audit done in a manner similar to a private sector business, is the question?
We are following government auditing standards, so.
So Trustee Trask, what we can do is that let us get back and let us look at the detail and then get back to you if possible.
You know, I'd really suggest you do it because these audits are going further to state and federal investigator.
We want to make sure that it's completed too. So
I have documentation from my office on an endowment fund in writing. The PUN group, my understanding is that you have not done previous audits
no, we
of
have
this
not.
office, have you?
First year. This is the first year.
That is correct. And when I look at the review, I see years of other businesses. And when I see yours, there's reporting missing to my office, starting with the endowment fund. But if I take a look at Exhibit A, page 5, it says that you were hired to do an audit similar to a private sector business. We are not private sector business.
Oh, yeah, no,
We are a uniquely empowered state agency.
correct.
Yeah. And I would like you to follow up on the endowment fund and report to me directly. You have my email, sir. My number is 990-0529. Thank you.
Trustee Souza.
Thank you, Chair. Again, the reason why you guys didn't find anything in endowment fund is because there's no separate endowment account. And thank you, Kapo Hana, for that response to Trustee Trask's inquiry about an endowment account. There's no endowment account that has been established or created or funded by OHA. So I don't expect you, Ken, to find anything in relation to an endowment account. So I just wanted that on the record. Thank you very much. Mahalo.
Thank you, Trustee Sosa.
Trustee Aquino.
Mr. Chair, in the same vein, I just want to reference the board to a memorandum from our Kapuhana of March 27th, 2024, which Trustee Souza quoted, indicating that there is not an endowment fund. Thank you.
Okay. Are there any other questions? Trustee Trask.
Yeah, I just want the record to show that in fact, we now have 2 sets of documents filed for the public and the board. One of them includes an endowment fund. Following that report, I requested the detail on it. And now I have a letter from OHA saying there's no endowment fund. I don't think there was one. I think it was false reporting. when you send out something, board members, and you put it down that there's an endowment fund, you can't come back later and say erase it. But the problem we have is that it was reported. And not only was an endowment fund reported, but we also received written information from the administrator of the office informing us who she had hired to be the director of the endowment fund. I have that in writing as well. And now it appears that there isn't an endowment fund. Why did we hire someone to run it? And why does this documentation say that the Pun Group was hired to undertake an audit of OHA in a similar manner to a private sector business? Inappropriate.
Trustee Souza.
Sure. So I just want to be clear. The last time the endowment was mentioned, I guess in reference to what Milani Trask said about public notice, there's two different documents, right? That was in our last meeting that we had. And basically it's saying that the endowment performance in the dashboard containing March 6th presentation, that was a presentation she's referring to. It's referring to the value, right? And referring to the presentation as the value of all financial, commercial, and land resources that comprise the various assets held by OHA. So we don't necessarily have an endowment account. Just because someone has an endowment director title doesn't mean we have an endowment account, right? So I just wanted that on the record, just so we can clear that whole thing up of two different documents, because the public is watching and wanted to know we don't have an endowment account. Thank you very much. Mahalo.
Trustee Aquino.
Mr. Chair, I'm prepared to move on to another question, another topic, unless this issue is still open.
Wait, Trustee Trask. Is there any other questions?
Yes, sir. Thank you.
Trustee Aquino.
Yeah, thank you, Mr. Chair. Ken, the question about our 2023 state audit from the state auditor. The auditor pointed out that we're authorized to transfer $3 million from the Native Hawaiian Trust Fund to the Fiscal Stabilization Fund. There were some questions in that audit raised as to the appropriateness of OHA's accounting for the transfers and for expenses. I wonder if you had a chance to look at that. In particular, a question is raised as to whether OHA exceeded its 5% spending limit, which would be problematic. Just to clarify, have you found the transfers from the Native Hawaiian Trust Fund and Fiscal Stabilization Fund to be appropriately accounted for?
Like $5 million, like a $3 million, right?
Ken, I'm sorry, I don't hear you very clearly.
Can you say that like the $3 million transfer from the state?
Ken, could you speak a little closer to your microphone?
Can you hear me now? Can you hear me now? Can
Yes.
you repeat the question about like the $3 million transfer?
Oh, sure. I was just pointing out that the auditor had reiterated that we're authorized to transfer $3 million annually from our assets, the Native Hawaiian Trust Fund, to fiscal stabilization. And I'm asking whether this has been done appropriately in accord with our 5% spending limit.
You know what, that one I'll have to go back and take a look at it before I
Okay,
can.
thank you very much.
Yeah.
Appreciate it.
Ramona, did you?
Yes, I'd like to respond to the Trustee Aquino's question. There's a footnote O, that speaks about the stabilization arrangements that we have and the $3 million that was transferred for the general fund that we didn't receive in fiscal 21 and later received in fiscal 22, and that we reversed that $3 million. So footnote O kind of explains what happened. Thank you.
Ramona, thank you.
Okay, are there any other questions on this? Okay, if not, thank you, guys. Oh, I guess there's a motion. What? Oh, okay. So if we're done with the presentation, we shall move on to new business, action item RM 2406. And I will, trustee Lindsay.
I move that the board approves of the OHA financial statements with independent auditors report for the year ended June 30, 2023, and the OHA report of independent certified public accountants in accordance with government auditing standards and uniform guidance, year ended June 30, 2023.
Mr. Chair,
Trustee Aquino.
I second that.
Okay, it's been moved, the action item has been moved and seconded. Is there any discussion on the motion?
Quick comment, Mr. Chair.
Trustee Aquino?
Thank you very much. I know it's a lot of work to conduct such an audit, so thank you so much to the PUN associates and the organization for doing that. But thank you to our administration for working with them. Good job. And it's a good audit report we can be proud of.
Okay, Ramona.
CFO, you're muted.
If we're not done, if we're done.
Yeah. I would like to mahalo the PUN Group for productive and successful external audit. First audits are always more difficult and require more time to go through everything. And it was a very nice audit. And sometimes we even had some fun. I would also like to give a shout out to Gilbertson, to Neil. He was Assurance Service Senior, who was not able to be here today, but he kept track of all the requirements, the files, the work papers, and just kept the whole team on track. He lives in the Philippines, which is 8 hours ahead of us. And so he didn't even miss a beat on that. So mahalo nui, Gilbert. And then mahalo to the finance team present, Wayne, Sylvie, and Shari. They did all the heavy lifting on this audit. These folks are so unbelievably good that their pictures are next to bean counters, nerds, and geeks in the dictionary. I have so much admiration and respect for their work and what they've accomplished at OHA. This audit engagement was accomplished by them. And they make sure that every balance is reconciled and accounted for on behalf of OHA and our beneficiaries. Mahalo.
Okay, thanks. Are there any other questions or discussion on this motion? Okay, hearing none, can I get a roll call vote?
Trustee Ahuna is excused. Trustee Akaka?
Aye.
Trustee Aquina?
Aye.
Trustee Alapa? Trustee Galataria?
Aye.
Trustee Lindsay?
Aye.
Trustee Souza?
Aye.
Trustee Trask?
No.
Chair Waihe'e?
Yes.
7 yes, 1 no, 1 absent.
Okay, the action item passes, is approved. So we move on to new business C. Action item RM 2407, approval of the OHA funding for an event sponsorship for the restoration of the Heart of Maui with 98 Degrees and Friends. And I will once again turn this over to our CEO, Pohana Stacy Ferreira. to
Mahalo,
present it.
Chair, Vice Chair, Trustees. I bring this request for event sponsorship before you in the amount of $10,000. This is a concert that will be put on and the proceeds provided to the survivors of the Maui fires. I will yield to Trustee Galutaria if there are any additional questions.
Okay. Trustee, did you want to make the motion first?
So we can discuss?
Yeah.
I'm gonna have to, Chair, I have to recuse myself from this particular vote because I'm a
Okay.
member of the board.
Trustee Lindsay.
Hara. Okay.
I move that we approve and authorize the following fiscal year 2024 event sponsorship disbursement for this purpose in the totaling $10,000.
Trustee Lindsay, it's been seconded by trustee Alapa. Any discussion? Trustee Souza.
Mr. Chair, I'm also going to recuse myself as I am a member of the board as well. Mahalo.
Okay. Trustee Galataria.
Yeah, thank you, Chair. Just want to bring some clarity so that hopefully the board will approve this matter. The reason trustee Souza and I have recused ourselves is we're members of the board of Hawaii Academy of Recording Arts, which is the fiscal partner for those putting on this concert. And so we're hoping that this particular concert is a benefit concert being put on by a group called 98 Degrees. And they're giving all of the proceeds over to Maui. And in particular, some of the recipients include some of the churches that have been burned down and also some of the schools as well. Primarily, the first one out of the blocks is Waiоla Church in Lahaina. And Chair Lindsay would probably be better suited to share a little bit more about Waiоla Church. But the Hawaii Academy of Recording Arts, along with the producers of the concert, have been in touch with several of the churches, several of the schools. As a matter of fact, ironically, one of the supporters of this concert is going to be joining us tomorrow, Archie Kalepa. And so I would hope that the board would find favor in this particular action item.
Call for the vote.
Can I get a roll call vote?
Hey, turn the mic off, please. Thank you. Trustee Ahuna is excused. Trustee Akaka.
Aye.
Trustee Akina.
Aye.
Trustee Alapa. Trustee Galataria is recused. Trustee Lindsay.
Aye.
Trustee Souza is recused. Trustee Trask.
Aye.
Chair Waihe'e.
Yes.
6 yes, 2 recusal, 1 excused.
The action passes.
Mr. Chair,
Trustee Lindsay.
I move that we approve the Molokai request for $1,000 for the funding of an event sponsorship for the Ho'olehua Homesteaders Association Scholarship Luau.
Okay, is there a second?
Second.
It's been moved by trustee Hulu Lindsay and seconded by trustee Souza. Is there any discussion on this? It's a very reasonable request.
Call for the vote.
Okay, can I get a roll call vote?
Trustee Ahuna is excused. Trustee Akaka.
Aye.
Trustee Akina.
Aye.
Trustee Alapa. Trustee Galataria.
Aye.
Trustee Lindsay.
Aye.
Trustee Souza.
Aye.
Trustee Trask.
Aye.
Chair Waihe'e.
Yes.
8 yes votes.
Okay. So we're moving on to now action item RM 24-9. It's the reappointment of Bob Lenau as a non-OHA LLC manager. Can we get that, trustee
Chair.
Lindsay?
I think most of our newer trustees do not know Bob Lenau, so I would like for him to be introduced by his executive director.
I will yield the floor to Richard Pizzulo, the executive director of Hele LLC, I guess.
Hele Aloha.
Hele Aloha.
Wonderful, Mr. Chair. Shall we put the motion on the floor?
Yes. Read Richard, we'll put a motion on the floor first. Trustee Aquino.
Thank you. Mr. Chair, I move to approve the reappointment of Robert Bob Lenau for a 3-year term and service period beginning May 10th, 2024, ending May 9th, 2027, as a non-OHA limited liability community manager for Hele Aloha LLC.
By trustee Aquino, seconded by trustee Souza, and I will turn the floor over to Richard Pizzulo.
Thank you, Chair, trustees, Kapohana. Thank you for having us here today. Bob has been a manager for the last 3 years. He's been a very active manager, and he has a very deep roots in Waimea Valley. He's worked at 30 years ago, he was the manager there. He worked with Uncle Rudy Mitchell. Uncle Rudy Mitchell was the person responsible for really laying the foundation for the cultural programming we do today. He also worked closely with Keith Williams, who developed the botanical gardens. So, as I said, and he's a very active manager. He reads everything and he asks a lot of questions, which is a good thing. So I really highly recommend Bob to be extended for another 3 years, not only because he's a really good manager, but eventually I'll be transitioning and it would be good to have that continuity. Right now, my plan is to finish the end of next year, 2025. So,
Well,
you know,
have to-
and
You
we
have
want
to serve as long as Bob. Right, Bob? Yeah.
Okay. Thank you.
Thank you. Okay, if there's no other discussion,
Call for the vote.
call for the vote.
Trustee Ahuna is excused. Trustee Akaka?
Aye.
Trustee Akina? Trustee Alapa? Trustee Galataria? Trustee Lindsay?
Aye.
Trustee Souza? Trustee Trask?
Aye.
Chair Wahehe?
Yes.
8 yes votes.
All right.
Thank you.
Motion passes. Thank you.
Thank you.
Thank you. Thank you, Bob.
Mr. Chair, I just want you to know that I knew Bob when he didn't have a beard.
Thank you for coming up and visiting us.
Coming out? Yeah, me too.
There he is. Okay. So I guess, so members are moving on to the consequence capital new business. Looks like he's somewhere. Oh, there he is. And I will turn this over to Vijay Chatterjee, who's online. Vijay.
Hello, Mike Aiko, Chair, trustees, Kapohana, staff. Thank you very much. As you know, we're Consequent Capital Management, and we are the independent board consultant. My name is Vijay Chatterjee, and for the first time, I'm not actually in the office with all of you for this particular meeting. I'm in Colorado on another client outside of Consequent that I work with. I'm also joined, I believe, by Scott Chachoy and Jerry Flintoff. And we're going to proceed with our usual sort of education session, as well as we have a personnel announcement. The Wi-Fi connection that I have is a little bit unstable. I've been kicked out a couple of times. So if I do get kicked out, I've been able to quickly rejoin. So when I see that you guys have frozen and you see me as frozen, just give me a second. I should come back very quickly. If for some reason I don't, obviously, please proceed, and Jerry and others will jump in. I think they have better connection. So today's session, we have 3 sub-items on the agenda. I'll say that the overall theme for our presentation is really kind of identity and private equity. So identity, we're talking about, you know, how to think of yourselves as an investor. What's the space that you occupy in the investment community as a capital markets participant? And some of that, I think, has come up because of this ongoing conversation about, are you an endowment? Are you not an endowment? How should you be structured? And it is important to kind of know yourself. You know, you go back to Aristotle in the Western and in the Eastern philosophies, you also have this idea of needing to know who you are, know who your enemies or your others in the marketplace are. And so it is something important, and we can talk about that in more detail. The another part of the presentation, which Jerry Flintoff has put together, focuses on you as a private equity investor and your program. And as you recall from our observations at a previous meeting, we identified your private equity program or your private markets program as something that needs immediate attention to maintain the sort of investment opportunities and structure going forward. And so Jerry will go into a little more detail about that. And we actually may have that as continuing business and return to it a couple more times going forward. So that's what we hope to accomplish today. But the first item, as you'll see, is that we do have a personnel change announcement. Ken Simon, our CEO, was hoping to make that presentation, but he was at another client meeting in Michigan earlier today, and he's actually, I think, traveling back. So I'll just note it, and then we ask that Scott Chachoy say a few words. The announcement is that Scott is decided to leave Consequent. He has an opportunity to go back into banking where he had been previously, and he's going to relocate to New Jersey from Atlanta. But he has been on the team and been very helpful overall in our efforts to service the OHA mandate. And Scott's responsibilities are going to be taken over by Jeffrey Fisher, who's worked with Consequent for the last 5 or 6 years in different capacities. And Scott can maybe give you a little more detail there. But Scott, do you want to say a few words to everyone about your plans and your departure? And then we'll move on from there.
Well, thank you very much, Vjoy, and aloha, honorable trustees and respected CEO and OHA staff members. You know, it was a real honor to be associated and having your organization here. As you know, I grew up in Hawaii, and so to connect the firm to Hawaii was just such a great beginning, and that was because of my a relationship with Vjoy, and he's a very talented, resourceful person that I think will be a great fiduciary and continuing to help to lead our firm. I just had a great opportunity to join CBB Bank, which is headquartered in Los Angeles. It's a California chartered bank, and coincidentally, they purchased Ohana Pacific Bank back in 2021. And my father-in-law was a founding member of Ohana, and so there is a connection. And the CEO of Ohana Pacific Bank became the CEO of CBB Bank, so I'm familiar with him and their leadership. And prior to joining Consequent, I was actually with Bank of Hope, and who my classmate is the majority shareholder who sold his shares to Ken. So that is the connection. But my manager, who will be the regional president in the Northeast, will be in charge of the whole East Coast. And the opportunity is that I will be simultaneously working on a Southeast expansion plan while he rolls out the Northeast. So I get to return to Fort Lee, New Jersey, where the regional headquarters will be, where I started my banking career, and enable me. But the hope is that we have 3 branches because of the legacy relationship with Ohana in Honolulu County. And I would love to visit if I can keep that connection there with Hawaii and say hello to you in person one day. So we thank you. And again, with Ken Simon at the helm and Vjoy serving as our Chief Investment Officer at Consequent, you'll be in good hands and will continue to benefit from their expertise and engagement. So I thank you and appreciate this time, even though short, getting to know everyone and serving you.
Okay, thank you very much, Scott, and obviously we wish you well and appreciate you coming on and making that statement, since you've been very involved. I think that Melissa or Crayon are going to give me a little support with the visual. But if you go to, thank you so much. If we go to the first set of presentation materials, which is our usual slide deck, I'll just note on page 2, we're following the same format. So there's a little background information. Then I'm going to give you a little bit of an update on activities. In terms of the education session, which, we'll move through, we're talking about beliefs, identification, and network. So I'll go into a little more in each of those slides. And then there's an appendix that refers to kind of some ideas about how you think about setting up investment beliefs. And I'll talk more about that. And then we've got our glossary. And then as a second presentation material, Jerry has provided some stuff on private markets and private equity in particular. And so we'll hear from Jerry at the second part of, or the third part of our presentation today. So page 3 is something that you've seen before. And if you go on to page 4, in terms of the investment education review on the top of the right-hand column there. So the investment program observations, and that's that idea we're in problem space as opposed to solution space. I'll have a few comments about the Common Fund Forum that many of the trustees had attended in Orlando recently. And these are, again, just my observations or thoughts, and happy to discuss further. Then I'd like to talk a little bit about investment beliefs and how asset owners use that and refer to that in their own work. And there are a lot of large institutional investors that sort of describe their investment beliefs as part of their overall documents. And then in terms of the Native Hawaiian Trust Fund and sort of how to identify yourself as an investor in particular, we have a matrix or a chart that I'd like to review with all of you. And again, that's another discussion item. And I know there's been a lot of conversations and discussions going on as related to that. And that is something we welcome because I think it helps you to position yourself as an investor. And finally, there's several pages of profiles of other types of investors in the marketplace that may have some similarities and certainly have some differences from OHA, as you are unique. But I was also asked in making a couple of revisions on some of the slides to include a profile of OHA, which staff asked me to do, and I went ahead and put something together. So that was not in the material that was passed out, but that is a slide that I can certainly make available at some point. It's using your publicly disclosed information to sort of describe how you describe yourselves, similar to these other pages that you see with Alaska, New Mexico, and others there. And we can certainly talk more about that later. And then we have the private equity observations that are going to come up, and Jerry will walk you through some of the design characteristics and an illustrative pacing model. And then the final thing on page 4 is you can see for the planned upcoming RMC meetings, you are going to hear from a number of your managers or prospects and service providers, and we will have additional probably material from CCM during those meetings, but the bulk of them may be a chance for the trustees to interact and hear from the fund managers that are actually managing your assets at this point. So if we move on to page 5, please. Just a couple of observations regarding the Common Fund Forum 2024, which I know that Common Fund is a longtime manager for OHA assets, and also trustees have attended the forum over a number of years. And overall, I did find it to be a very helpful and topical set of meetings and sessions. And we also did, in addition to the trustees, I should note that we had staff as well as CEO and the endowment director. So it was well covered in terms of OHA, and that makes sense. I would note that, so I note on the right side some of the general sessions, selected sessions, and the bespoke session that OHA had set up. and our ability to have conversations. I would note that, of the types of conferences out there, this one is not done by a sponsor. There are not other competing viewpoints or participants. This is a single manager forum, which can be valuable, but you should also view it a little bit skeptical, as that it is a big opportunity for them to just put forward their best foot and be an advertisement, because they control all the speakers, they control all the attendees. And so that's just something to keep in mind in terms of they're going to put forward their best foot, and they're not going to have anything that sort of detracts from their overall message and their relationship with their clients. And they did a very good job of that, I felt, and they're very persuasive. I would also note that in speaking with Common Fund staff there, I asked if any of the attendees were kind of like in the tax exempt status of OHA, and I said maybe 80% of the folks here are kind of endowment foundations and file a 990 form, which we can talk about. And the response was that actually 95% of probably their clients are in that category, which makes them a little bit different than OHA. I was also told that there was a public pension plan that attended the meeting last year, and in terms of trying to understand, what your service providers, what your fund managers are good at, there were no other public plans that I could see attending this year, and certainly there were no prominent ones. I don't think public pension plans use OHA, so it's kind of interesting that there was a public plan that hired them for some reason. And I can talk about that more maybe offline. I would note that because you are only interacting with Common Fund clients there, the networking opportunities are kind of limited to that universe. And I did manage to have a conversation with the university endowment that was there. And interestingly enough, as Common Fund said, the best way to work with them is either as an OCIO or as an alternative specialty manager covering all your alternatives. That's not clearly how OHA works with them, but this university endowment uses them for just kind of interesting ideas or best ideas. In many respects, this university uses them the way a family office might use a group like Common Fund. And from further conversations, I understand that the CIO of that university actually comes from a family office background. So again, that's just all to kind of put in context my impressions of the event by your longtime manager. I do encourage the opportunity to maybe attend other types of events, whether they're sponsored by a group or they're multiple sort of managers that are independently presenting over time. Those sorts of environments can be useful, just as this kind of environment can be useful to a point. And I have recommended to chair and to CEO that there is a conference coming up called the Milken Global Conference that it would make sense for someone from OHA to attend. And I think that may be decided later, but there are other events like that can be very valuable in terms of establishing yourself and getting market intelligence. So that's all I really have to say about the Common Fund Forum right now. If you'd like to turn to page 6, I mentioned this at a previous meeting that one way that large asset owners or asset owners are able to identify themselves in the marketplace is through the articulation of something we call investment beliefs. So investment beliefs, there's a description here from a paper done by a Harvard group in 2009 that basically just kind of outlines their view of what trustees and fiduciaries, can clarify the nature of financial markets and their role in financial markets by stating sort of beliefs. It's not a mission statement, so and it's not an investment policy statement. Those are slightly different things, but why consultants and others sometimes, have their clients, their asset owner clients, articulate their beliefs is it's a great communication tool. And you can see on the bottom, the examples there are, from the Harvard paper, but also CalSTRS puts out their investment beliefs. They've got 9 basic beliefs. This is something that could be probably helpful for OHA to also think about, what do you believe about markets? We talked about that aquarium and building a portfolio like an aquarium that represents the opportunity sets in the world. Well, in order to further understand what are those opportunity sets, saying what you believe those opportunity sets are is a helpful exercise. So we may want to come back and articulate those beliefs with you. And that might be the next level of conversations that I try to have individually with trustees going forward. If you go to page 15, just skip ahead to page 15 real quickly here. These are sort of an example of sort of investment belief prompts to get you thinking about what it is, what are you trying to articulate? So the first 2 bullet points here are talking about, ideas of what do you believe the value is of making investments, of investing in capital markets. Obviously, the fact that you have a portfolio and you're investing in capital markets means that you see that as helpful to meeting your obligations, your beneficiaries' needs going forward. The next 3 bullet points refer to ideas about how you think markets operate. Are they efficient? Meaning that prices reflect information and therefore can be relied upon in terms of making an investment. And there's also the idea that, can you generate excess returns? Can you generate something that they call alpha, which is this excess return? And so if you believe that some markets are more efficient and maybe some markets are inefficient, that will drive your investment strategies in a certain direction. So being able to articulate that and express that is what we do in the beliefs. The next bullet point has to do with kind of the importance of portfolio asset allocation versus security selection, and where that fits into your portfolio or the way you believe portfolios should be built. The next 2 bullet points talk about the definition of risk, and we briefly mentioned that before. Diversification is also a risk mitigator, and I've mentioned several risk mitigators, but diversification is an important one. And the importance of having a diversified portfolio is something that an asset owner like OHA might find more important than, say, a hedge fund manager that's investing in the markets. And so their belief system is would be clearly different than an OHA. The final 4 or so bullet points have to do with ethical investing and this so-called ESG, environmental social governance type investing. And those are prompts that may or may not be important to OHA to articulate. To some groups, they are very important, and to other groups, they sort of are maybe embedded in their other beliefs of how markets operate. So if we go back to page 6, on the left-hand column, the value of articulating and stating your investment beliefs are that you show that these are broadly held by your organization, and it allows you to communicate to your peers and people in the organization, as well as to the marketplace, what kinds of activities and what kind of strategies you're going to want to be investing in. It's a tool that can be used to educate stakeholders, staff, leadership. In fact, going forward, knowing that as a overall entity, this is how you think about the markets, it clearly then leads to the kinds of investments and portfolios you're building. And so it provides continuity over time. It doesn't mean that investment beliefs don't change over time, because markets certainly change over time. But it is a good tool. So when you're onboarding new trustees or new staff, they have an idea of what you believe in and why you're investing the way you do. So I think it'll be important to come back and talk about investment beliefs, but I'd like to further that discussion and maybe have some draft beliefs and see where individual trustees come out on those ideas and then modify it. And then ideally, maybe that becomes a document or a source that you can use for education, for continuity purposes, and just for communication going forward. So that's a very brief sort of introduction to the value and the importance of investment beliefs and how they're stated in the marketplace. And again, you can see the examples in the Harvard paper that's referenced there in the link, as well as CalSTRS, the second largest public pension plan in the country, in the United States, that articulates what they believe and therefore how they invest.
Okay,
Now,
Joy, Trustee Trask.
Yeah, sorry, I can't see what people are reacting to. I apologize.
Yeah, I just had a couple of comments and questions. One is that many years ago, I actually was a trustee and went to the Common Fund. Everybody there was a nonprofit. Everybody there was a nonprofit. That's why I've never gone back, but I would really appreciate it, Vjoy, if you could give us, looking at where we are invested, if you could give us some suggestions of better meetings to go to. Years ago when I went, everybody was a nonprofit except for one Indian chief who was trying to change his Indian reservation committees into nonprofits. But, I think we need something else. The other is what you're talking about, the investment policy statements now, and what you just went through. We don't get the graphics, but I had wanted to ask you, the investment policy statement and the other things on that graphic are investment beliefs. Are you talking about the office investment policy or not?
Yes. So thank you for that question, Trustee Trask. Regarding conferences and events, I do think it's important to attend events that your managers sometimes sponsor, not maybe every year, but those are opportunities to learn more about how they're managing your assets. But there are indeed other events and conferences in the marketplace with different sponsors, with different types of agendas that allows you to get a broader scope and understanding of what's possible. And I mentioned that the Milken Global Conference, which I think at least one person on the OHA administrative staff side has attended previously and sees some value in that. I see value in that particular event, but there are other events, and I am happy to continue to make OHA aware of those events and recommend them accordingly. Regarding the question about policy and investment beliefs, so investment beliefs are not meant to be investment policy statement. That document, which we made some observations with last time, and I understand staff has also been working on a revised investment policy statement, is a separate document and plays a different role in the management of your assets than investment beliefs. Investment beliefs are really statements saying like, we believe markets are efficient or inefficient. We believe that there's opportunity to generate excess returns in active management, say in private markets. Those are kinds of beliefs about how markets work. Now, an investment policy statement would go into detail about, what you want to allocate to those sorts of markets, the way that you would actually build the portfolio. And then there would also be policy related to or operation instructions, guidelines about how to actually execute. So different documents, but both I think are important. And while every investing entity, an asset owner is going to have an investment policy statement, at least they should. The investment beliefs, not everyone necessarily articulates. but implicit in the way that you invest and the portfolios that you build is the idea that you believe the world markets, you believe your entity working in those markets is generating return. And so putting that down on paper, and like, in the case of the example here with CalSTRS, they have 9 general beliefs that help people to understand this is why and how they invest. They actually have some ethical beliefs that they include in their investment beliefs. And so, that's something that is what you would have in a belief statement. I hope that clarifies.
Thank you for that, Joy. May I ask you now, because you're the only independent investment consultant that we have, and OHA has never had one for over 20 years. So I want to make this request of you, language for a good investment policy for my office. I would like to see it. I would like to see it from yourself. I'm not that hopeful for anything that comes from the admin, for the very reason we don't have the expertise. We need an independent OCIO or an independent consultant. This is what is required. And this is why you're here to do the training. But I would very much like to see your recommendations. And also please send me the data that you present, because we only get writing. We don't get the slides. Thank you.
Trustee Souza.
Hello, Chair. I just want to say something for the record, because also this is a public meeting. Admin has been doing a great job. Kapohana, Stacey Ferreira has been doing a great job, especially filling vacancies to get the job done. So I just want that on record. Mahalo.
Okay. Are there any, okay, if there are no other questions on that part of the presentation, Vjoy.
Yeah, thank you, Chair. Yeah, if we could turn now to page 7 of the presentation. So this chart here is kind of a compare and contrast type exercise. And it comes out of another story that I don't need to go into. And there's a history of kind of how this way of, comparing and contrasting yourself to other examples in the world, other entities, helps you to clarify where you fit. Because there's no group that's, you're exactly going to be like, or, completely unlike. And so the exercise, I think, comes out of the conversation that's been going on about, what is OHA in terms of the Native Hawaiian Trust Fund as an entity in the marketplace. And, I think you can identify this comparison tool. You have legal obligations, there's source of fundings, there's investment mandate, there's operational activities. Those are all ways that you can kind of better place and think of what you are. Obviously, there's enabling legislation and laws that dictate what you are, but you can further refine that in terms of comparing yourself to other groups. So in this table, along the first left column, you have different kinds of investors in the world. And these are all asset owners. So these aren't asset managers. These aren't other types of investors. And then across the top, you have different categories that we can kind of try and compare yourself to. And within these categories, it can get a little messy and sort of it takes some clarification. And there's, again, maybe some overlap ideas, and that's part of the conversation that we can have here, and I think is important to have, because at the end of the day, you as the trustees collectively are going to define what the trust fund is and what the trust fund does, why it exists, and what's the purpose of its existence to support the mission of OHA. So if we just look down the left-hand column of these entities, so the first one is, of course, the Native Hawaiian Trust Fund. The next 2 entities there are basically public entities, ERS, EUTF. The next three, UH Foundation, KSB Endowment, the Hawaii Community Foundation, those are basically endowment foundations. And then the last one, Alaska Permanent, is a little bit different. They actually, consider themselves and operate as a sovereign wealth fund, but they're a sovereign wealth fund within a state framework, the state of Alaska. In fact, the SWF that often people shorthand refer to sovereign wealth funds around the world, from other countries, you could just call it a state wealth fund. And so these are entities that the Native Hawaiian Trust Fund is going to have some things in common and some things different. And what these different categories do is it prompts a discussion, and hopefully it leads to an understanding of, okay, what are you as an entity? What are you as an investor? And then, whom of these groups do you look to for guidance, for collaboration, for networking, to do a better job? And every one of them can be a good networking piece, but understanding who you are, understanding the similarities and differences makes a difference in terms of how you operate and why you might operate similarly or different to them. So the first column there, and I'll try and go through these columns fairly quickly. And again, this is more for open discussion. I'm not trying to define you ultimately. That's not my job. I just want to make you aware of these different comparisons because it may be helpful for you to better define yourself. Legal enabling kind of legislation, where or how are you created? The first three groups are basically created by either the state constitution or statute. The next three are private enabling documentation. The last one with Alaska is also a state entity that was created by the state. The next column there, and this was kind of what I was referring to, this Form 990, which is a tax status. This is how these entities get their tax exempt status, if you will. At least that's what I was trying to get at in putting this column. And maybe it goes back to the comment Trustee Trask made about the attendees at the Common Fund event in the past. But when you file a Form 990, you're getting your tax.
By the way, this happened earlier. He may be back on within minute.
I'm texting him.
VJoy, we see you, but you're muted.
Apologies, I'm not sure when I froze. Did I finish talking about the file 990, the Form 990s?
VJoy, you're about midway through explaining it. Yeah.
Okay. All right. Sorry about that. So I'll just sort of say, so the public entities you don't have your tax exempt status based on filing a 990 requirement with the. Did we talk about that? Okay. The private entities do in terms of their tax exempt status. And that's because groups like OHA and ERS, EUTF, Alaska Permanent, your tax exempt status comes from being part of the sovereign, right? You have the sovereign tax exempt status, and that is because you're part of the state and whatever state that is. Moving on to the disclosure rules, FOIA or state sunshine rules, the three public entities here, and then also the University of Hawaii have those disclosure rules. Private endowments and foundations don't have those kinds of disclosure rules. They don't have to file a public agenda. And so again, these are the similarities and differences. The source of your investment funds, come from the state, similar to the ERS and EUTF, but they also have the employers and the employees who are contributing to their portfolios. The endowment foundation world tend to be funded by private donations or estate plans, which you can see there, and the restrictions are related to those mandates. Spending policy, you have a spending policy. The ERS EUTF does not. I believe that the foundations, endowments all have a spending policy, which is related to their tax status, as opposed to my understanding for the Native Hawaiian Trust Fund, you have a spending policy that's based on your own mandate and what you're trying to accomplish, but I don't think it relates to your tax filing, similar to Alaska. Everyone invests in multi-asset portfolios, and that's appropriate, but the way they invest might be different. You certainly hear about the endowment model or the Canadian model. We can discuss that in a little more detail, what that means. You do see some public plans kind of saying, hey, we're going to invest in more alternatives, which is more in line with the so-called endowment model, but it doesn't, but they don't do as much. So there are some differences there, and that comes into the portfolio construction. In terms of mandated liability, so what this is meant to capture is this idea that for like the public entities, the ERS, the EUTF, they are obligated based on different spending rules and requirements because of how many years people work and what level they get paid. They have real liabilities that they can't get out of, that they have to meet over time, and that's a big issue for them. Similarly, with the endowment foundations, many of the money that's put there can't just be spent anyway. It's their donors and their restrictions on the way those funds can be spent. So if you create an endowed fund at the University of Hawaii and you say you want this to be spent on the football team, they can't turn around and spend it on professor salaries or something like that. So there are a lot of restrictions in there. My understanding is that for a group like the Native Hawaiian Trust Fund and the Alaska Permanent Fund, is you're deciding what you want to spend on. That's the trustees sort of mandate, and there are some prevailing ideas that go back to the original constitutional creation of OHA in terms of where you could be spending those endowments, but or those funds. But that's why you guys spent the first half of this meeting kind of voting on how you're spending OHA funds going forward. That's decided by the collective wisdom of the board. The final issue there in terms of operations, this is sort of important, compensation and benefits. I think you have a combination of state and internal decision-making in terms of how much compensation and benefits people, staff and trustees earn working at OHA. For the public plans, it's really based on the state and collective bargaining. For the endowments, foundations, a lot of that is internal. They don't rely on the state to decide, how much different groups should get paid, at least for the foundation for the university. I know the university professors and others are part of the state, but we're talking about the foundation here. And Alaska is similar there. And that has implications for how you can attract and retain talent. I'm talking specifically in terms of in the investment world. And so that's something that helps to know what are your opportunities and limitations in those restrictions. And so it does all really matter in terms of whether you can, you're a public plan or you're a endowment foundation or you're a sovereign or a state wealth fund, because you're defining yourself and you're defining what it is you're able to do. I think technically, maybe OHA could redefine itself as a pension. if you just said, hey, every, Native Hawaiian person over 70 years old is going to get a check from the Native Hawaiian Trust Fund. That's essentially what Alaska does for all the residents or citizens of Alaska, is that they either give a tax break or send money to its citizens. I know that the overall mission and objective and founding of the Alaska Permanent Fund is different than the unique nature and history of OHA. But again, trying to make these comparisons and understand where you might fit is where we are. So that is a quick summary of this page. And again, it's meant to sort of help to further discussion. And I know there are probably some hands up. I'm happy to talk some more about that. And then I'll move on to the last part of my presentation so I can give Jerry a little time to talk about private equity.
Trustee Lindsay.
Vijoy, I see that the UH Foundation is not a state agency under the legal enabling, but I'm confused since it is under the University of Hawaii. So can you clarify that a little bit more for me?
Sure. So the UH Foundation is a little bit of a tricky sort of entity, right? Because it has both public aspects to it and then non-public aspects to it in terms of a foundation. The way I understand that the university runs this is that overall, people make contributions and create scholarships at the university, and then the university contracts that out to the UH Foundation, which has to report into the regions and to that group, but they are kind of independently run differently. And so the creation of the UH Foundation, those scholarships was not created by the state. It was created by the fact that individuals, groups want to make a donation or contribute to their alma mater, and that alma mater then manages that through a foundation, as opposed to the ERS or the EUTF, which was created. In the one case of the ERS, it's a constitutionally created entity, and the EUTF, which is basically by statute.
So in the case of the telescopes on Mauna Kea, could they be in business with the UH Foundation and not the university itself?
I don't know the answer to that.
Thank you.
Okay. If there are no further questions on this portion, Vijoy, you can go on to the next part of the presentation.
Sure. So the next page 8 that I created at the request of staff was to create a profile of the Office of Hawaiian Affairs. And I know that trustees, you don't have this page in your material. I appreciate it being shown on the screen there. And again, this is just taken from your public material that's available on your website. And I think it covers, sort of some ground in terms of what you are as an entity. And then the thing is if you compare it to the next several pages, I have the Alaska Permanent Fund, the New Mexico State Investment Council, and then there are a number of other ones that are created for different reasons by their respective states. There are some other ones that are, I would say, more like an OHA that are left out, but they just didn't have as much information available or least readily available where I could find it. And the idea here is just to give you an idea of other entities that are created by their states for specific purposes of supporting the citizens or groups of citizens or infrastructure in their state. And then they're managed in different ways. And so there's no one size fits all. There's no exact OHA duplicates out there, but these are potential groups that in terms of how they manage their investments, what the kind of portfolios they build and how they've grown, are potentially a good network for an OHA. So if you were to reach out and develop, a community that you can call on and ask questions. How do you guys deal with governance? What do you think about, private credit investing? Is that something that you do? These are groups that over time, it might make sense to have some better contact with. And some of these groups are more relevant and probably more open to those kinds of conversations than others. And again, it's not that OHA would follow anyone else, but it's kind of just a sounding point where you can kind of, get market intelligence and then also position where are you similar and where are you different. So again, this exercise is not meant to define you as an organization or as an investor. That's really your Kuleana, not your consultants. And so I just want to put that out there as a better and a different way to kind of come to an understanding of what OHA is in terms of being an investment entity and the kinds of opportunities that are open to OHA as an investment entity. So that concludes my conversation, and I'm happy to come back between now and any other meetings to discuss any of this. I'm happy to take questions now, but I'd also like to let Jerry talk a little bit about the private equity and private markets portion of the OHA portfolio, in particular, since we have identified that as an area, we observe that as an area of needing some immediate attention.
Okay, if there are no questions for Bijoy, then Jerry, go ahead with the private equity investments.
Yes, aloha all. Thank you very much for having me this evening. Very much appreciate this. Karen, I'll just go ahead and announce what slide to start on, and if you can jump forward to that and just type it in on the right, that would be great. So maybe we can look at the table of contents on slide 3 rather, sorry. In the interest of time, I thought I would just, you all have the slides, and I'm available and will make myself available to meet with any one of you separately, and would be happy to go through the entire deck slide by slide to ensure understanding and be helpful in any way that I possibly can. But in the interest of time, I thought I'd just basically hit on 3 major areas today. A high-level introduction to private markets and private equity, and while we invest in the space. Then maybe make a few observations about the OHA private equity portfolio, and provide a peek into potential recommendations. As Bijoy has said in the past, we're still sort of in that problem space, and then we'll work over time together into the solution space. And then I did take the time to run a very, very preliminary private equity pacing model for OHA, and would be, it's a pacing model is a planning tool, and I think would be helpful as it provides certain insights as you go forward. If we could jump to slide 6, please. Yeah, okay. So in private markets, there are 4 basic areas, as you can see them here: private equity, private debt, real estate, and infrastructure. Today, we're going to focus on private equity. Now, at various times, all 4 different organizations, all 4 have ended up in a private alternatives program or a private equity program. When we talk about governance and aligning the portfolio, different aspects may fit in different areas. Private equity, private debt may play a role in income portion of a portfolio alongside fixed income. Real estate may be in the private equity portfolio or alternatives portfolio, or it could be in global real assets, and infrastructure may also be that as well. But today we're going to focus on private equity. If we could go to slide 12. Yeah. Okay. Private markets. So, private equity is a very interesting space, and the reason we private markets investments are bought and traded privately. They are not publicly traded. As you can see here, over time, the number of U.S. IPOs has been declining over time. And this is in part because, to be a publicly held company, you have to conform to a lot of regulations, and it's costly to be owned in the public form. Companies, have been staying private 2 times longer now than they have in the past. The reason we invest in this asset class, as you can see, private equity strategies generate high and attractive returns relative to the public markets. That's the middle area. And by investing in private markets, you open yourself up to the opportunity to invest in a large opportunity set. Of all the U.S. companies generating in excess of 100 million or more in terms of annual revenues, 87% of them are private and only 13% are publicly listed. So you open yourself up to a wealth of opportunities. We can go to slide 13. And here you see the returns by the different strategies within private equity. Buyouts in the secondary market, venture capital, infrastructure, real estate, on down the line. The returns for the private markets are in bars, and it's publicly listed, and traded equivalent in terms of index returns are there. As you can see, there is an opportunity in the private markets, particularly in buyouts, secondaries, venture capital, and the like, real estate, to earn 300 to 500 basis points of excess returns. And this is over the last 15 years. Okay, we could click forward to slide 16. That would be great. Another way of looking at the outperformance here is $100,000 invested over the last 15 years in private markets. It would have achieved 5.75x return, okay? Whereas the S&P 500 would have achieved a 3.5x return, and the world equity index would have only generated a 2.25x return. So clearly you can see investing in a private equity markets can generate significant returns if done well. At some point, I'd love to have a private equity, primer session with you all. The challenge with private equity indexes is they're non-investable indexes. So that is it's the beauty of private equity because everything is private, but it's also the bane of private equity in that it's private and you have to expend resources to discover these opportunities and find these investment options. Okay. If we could go to slide 19, please. Okay, now I wanted to chat here a little bit about the private equity portfolio. And this is a little snapshot of things as of year end, 12/31/22, when Siegel Marco generated some reports. During, there was in the shift from Siegel Marco to Northern Trust, there appears to have been a shift in the classification of private real assets, and they have been moved over to global real assets. So here, as you can see, the portfolios, your private equity portfolio stood at 17.13% of the total fund, just a little shy of the target allocation of 19%, but within the policy range of 0 to 25.6%. The total plan at year-end 2022 was 493 assets. Okay, if we could click to the next slide, 20. Okay, here is the year-end reporting numbers as of, through coming from Northern Trust as of year-end 2023. As you can see, they have their classification label is the one that's typed in, and the label in bracket is in the one from when we were the portfolio was being reported by Siegel Marco. With two things happened with the reclassification and with the runoff of some of the portfolio. The private equity portfolio now stands at 11.34%, which is below the 19% of the target. And that's why we're calling to, in the near term, we'd like to pay a little attention to the private equity portfolio and get you back onto, an investment program plan. Now, if we had moved the private real assets back into the private equity portfolio, the equivalent to the year-end 2022 number, the private equity portfolio would have been at 14.31%, which is still below the 19%. Interestingly, with that shift of the private real assets to global real assets is now slightly above. It's at 7.75%, which is a bit above the 5% global real asset targets. So yeah, we have to sort of think about things here a little bit. Okay.
So just, Jerry, just to clarify something here. So it's our understanding that staff has been asked to not make re-ups and not to be investing the cash as it's come back to make new commitments. And so what we're identifying here is that that they need to be able to do that at this point, because you're going to fall further and further behind of your target allocation. I mean, we can do a new allocation study. We can talk about how much is appropriate private equity in your portfolio, but the policy as it stands now is that you're falling further and further behind as time passes. And I believe staff feels that they aren't able to make investments from some directive that they received. And so we need to find a way that staff or some way we've start to restart the private market investing. And that's why we observe that as being a need for kind of immediate attention. And that's what Jerry is trying to point out here. So it is probably a conversation that we should have with staff, with chair, with us to figure out a way going forward. How can we get on track? And then the next part, I think Jerry's presentation was to kind of show what a pacing model might look like, which is something that asset owners have in place. So over time, you're always, as long as you want this exposure to private markets, you're always kind of making investments every year. You have a disciplined approach to it, and it just sort of runs on its own over time as the plan, the allocation is kind of self-funding in a way. But that's a conversation that we'd like to have and move forward. So let me stop there, Jerry, before you go any further in terms of pacing model and see if there's any questions on what you've talked about thus far.
Oh, Stacy.
Mahalo, Chair. Mahalo, Vijay, for bringing up that point. That was a serious concern that was brought to me when I came to OHA as the new CEO. And I just want to mahalo Ramona Hink, our CFO, in bringing that to my attention, that there was previous directives from the board not allowing Ryan to be able to make that active management decisions. When I brought that to Chair Lindsay's attention, she rectified it immediately. And so we have been proceeding with Ryan, actively managing the portfolio. We're so grateful for Chair's leadership in allowing us to do this. But to your point, it's going to take time to catch up, because there was such a large period of time in which it just wasn't actively being managed. And so I appreciate Ryan jumping in and doing what it takes to get us to the benchmark. So mahalo to Ryan, mahalo to Ramona, and mahalo Vjoy for bringing that up.
Thank you, CEO Stacy. And yeah, along those lines, also what we want to add to that effort is that to create a more strategic and longer term plan, which is the idea of this pacing model. And Jerry, maybe you can just share that as an illustration in terms of what kind of policy and what kind of activities you need to have around it, because it is one thing to kind of be reinvesting into existing managers, but it's also managing toward the target for the opportunity set going forward. And the marketplace is changing a lot, particularly in private markets because of things going on in biotech and technology. And so we would like to, in addition to having staff or a program where you are reinvesting cash, is to build a more strategic operational framework, so that and make sure everyone understands that and agrees to it, so that the program then begins to run more routinely and kind of in a disciplined way, as opposed to when I mean disciplined, I mean like as opposed to where there's a lot of second guessing and making investments and holding back investments. That's not really the way to do a private market program, because nobody really knows, is this the year you should be making investments versus next year or last year? It needs to be kind of a disciplined approach, getting to the exposure that meets your long-term strategic goals, which in this case right now in private equity, your long-term strategic allocation is 19%. And so what Jerry and what staff has pointed out is that it going down to 11% and not being rectified puts you behind where you want to be for your long-term goals. And so that's what we're trying to get to. And so Jerry, why don't you share that, and then maybe we can conclude, because I know the meeting's been going on for a little while.
Yeah, if I could just get us through like 6 other slides briefly, I can touch a lot of high points. If we could return to slide 21, please. Yeah, okay. Aligning the governance, here we've seen this slide a few times. I personally would recommend that you consider the primary objective asset class approach in terms of the role that different investment programs play within the portfolio. If we were to go down that path, I would recommend that private real estate assets go with the inflation hedge in real estate, private debt with income and fixed income, and that growth and private equity would focus on buyout, venture capital, secondaries, and co-investment strategies. I'm sharing this with you to set up the discussion that I'm going to have in a second regarding the private equity program. I did want to say a few quick comments about observations on the slide. If we could go to slide 25, please. Again, I'm happy to spend time with anyone on those other slides at a future point in time. Okay, aligning the program, the private equity portfolio with the overall program would be good once determined. I'm suggesting here that there was a significant challenge working across all the different reports from Siegel Marco and Northern Trust. Ultimately had to get reports from the different managers to put together a reporting thing. There is a capacity within Northern Trust to assist with tracking your portfolio a little bit better. It would involve a modest additional investment in reporting services from them. And I would gladly work with Ryan or whomever, to push them to deliver reports that would be more easily for staff and others to really get an assessment as to what's going on with the private equity portfolio. I can come back and talk to you about that later. I also believe that there needs to be an implementation of a much more rigorous performance reporting and benchmarking, that we need to get this from the managers to enhance the portfolio monitoring. I'll just simply state that I've asked this for them to generate reports on themselves and kick it back to me. One manager, disappointingly, it's not only is it absolute returns, but it's also relative returns. And the relative returns get into business of whether someone performed in first quartile, second, third, or fourth quartile. First quartile is best. One of your managers only was able to get about 25% of their performance in the first and second quartile, while another was able to accomplish 75% of their invested capital into first and second quartile. And the reason this is important is you want to know who is generating, good returns for you, and then again, who are not, and then you can make choices about on a going forward basis who you want to work with. And it's that kind of rigor that you need to also apply in making new commitments. And we could talk about that more further. Another recommendation, as Vijay has alluded, get back to committing to a steady private equity commitment pattern. He made the point very well that you don't know which vintage years, and there's a slide on this, which vintage years are going to generate significant outsized returns. It's very important in private equity to diversify across vintage year, strategies, and geography. Okay. I would recommend that we develop a strategic plan for the asset class, and we can talk further at a future date about implementing private equity best practices. Okay, if we could go to slide 27, please. In slide 27 here, you can see this is basically the private equity. So I generated a preliminary pacing model based on the information I was able to gather from the various reports from managers, Northern Trust, and Siegel Marco. I made the following assumption in terms of allocations: 50% of the portfolio to private equity buyouts, 20% to venture capital, 15% to secondary SMA, separately managed account, 15% to a co-investment SMA, separately managed account. We can talk about different ways to access exposure to the asset class, fund to funds, direct investments, separately managed accounts, and the like at a future point in time. I guess my recommendation is for OHA to become more of a direct investor and less of a fund to funds director, aggregate some of its capital and make commitments to SMAs to get improved service out of potential investment managers you may engage in the future. Anyway, these are the assumptions that were made. And I picked up for the percentage of the total overall portfolio, I picked up the year-end assets at $549 million. I assumed a growth rate of 7% per year, and I assumed a distribution of private equity, 80%, private debt at 20%. And just as a quick reminder, private equity includes buyout, venture capital, secondary investments, and co-investment strategies. If we can go to 28, please. Okay, here we see the model basically spit out, and this is what's, as you can see, the model basically tracks what the new commitments that make, and at least preliminarily, it would take, based on the pattern, which I'll show you in a second, approximately 5 to 6 years to get back to the full 19% exposure. As often happens with private equity pacing models, it does in the outer years slightly over allocate. I would just comment that these models should be updated at least annually, if not every 6 months, and some and some do it as frequently as quarterly. I think every 6 months makes the most sense. 29, please. Okay. And here you can see the new commitments are in gray. And the reason they're a little bit lumpy is every 3 years, we're making a new commitment to those SMA accounts. This just happened to be a strategy that I think would be effective for you, and we can have a further discussion about that. But that's why the periodic gray bar goes up higher, but you can see the more steadier, commitment amount, at roughly, 30 million a year or so in the off years, in the other years. Again, it would take 5-6 years to get up to the targeted 19%. In the near term, you're having a slight runoff in your private equity portfolio, which is why your NAV, which is in the blue, has dipped slightly, and it takes a little while to, get back up to scale. Okay.
Trustee Alapa.
I would like to ask a question regarding the commitment and NAV. It's basically, if you could explain what runoff means, runoff of its current portfolio. What is the runoff?
Yeah. Okay. Actually, if we could forward to slide. If you could go to slide 30, that would be great. Okay. So going back to 2022, the amount of the portfolio was 17% of the total fund. Last year, at the end of the year, it was down to, let's say, since we're shifting categories a little bit, to keep it comparable, it slid down to 14% of the total portfolio. If you don't, for a private equity program to become, we call it self-sustaining, you need to make regular commitments to the asset class. And this gets into a broader discussion of the private equity program. When you stop making commitments, the net asset value of the portfolio, private equity managers invest in companies over 5 years, and the assets, go up over 5 years. Then the subsequent 5 years, they sell those assets. So then the NAV goes down. So to replenish those assets that roll off, you have to make consistent commitments to the asset class. When you take a pause for a year or several years and don't commit to those assets, at a certain point, once they reach their peak, there will be a runoff, a running down of that NAV coming down. That's unfortunate. It just means that you're a little bit off your target. But what you're getting back is you are getting distributions from your portfolio. So you're not losing anything. You're just missing an opportunity in those different vintage years, if that makes sense.
Yes, because we wouldn't want to have that happen again. Correct.
Yeah, typically you don't, because I know this is a bit confusing here in this chart, but if you make the gray contributions, the gray lines, the negative numbers, right? You're investing in assets that ultimately will throw off these distributions a little bit further down the line. And the net cash flow line is the green line, okay? So over the next, and we can run different iterations of this model, working with staff and all that kind of great stuff, but you're going to have a muted J curve. What is a muted J curve? A J curve is, in private equity, we're getting into the primer stuff. It's called the Valley of Tears, where you're actually putting out more money than you're receiving back. But then over time, that starts coming back. And eventually you want to get to the point, and here the forecast shows it happens in 2030 and 2031, where we cross over, where you're actually getting back more in blue bar distributions than you're putting in terms of contributions. And on the net basis, as you can see, it's positive green, right? And it's throwing off more cash, than you're actually investing, which is the beauty of, when it's well done, that's what your private equity portfolio should be doing. Yeah,
All right, thank you very much.
yeah, sure. And with that, guys, I think, that was a great question because it led right to the next slide or two. So that was brilliant. I'm happy to answer any questions. And obviously, I think I would really appreciate the opportunity to spend more time with you all, talking about private equity. So.
Okay, thank you. Are there any other questions for Jerry on this? Okay, thank you, Jerry. Troy, did you have was there anything else?
No, I think that concludes our presentation for today. And again, happy to follow up.
Oh, all right. Thank you very much. And with that, can I get a motion to adjourn?
So move.
It's been moved by Trustee Lindsay, seconded by Vice Chair Alafa. Any discussion, members? Hearing none, can I get a roll call vote?
Trustee Ahuna is excused. Trustee Akaka, thank you. Trustee Aquino departed at 3:18. Trustee Alapa. Trustee Galatura departed. Trustee Lindsay.
Aye.
Trustee Souza. Trustee Trask departed, and Chair Wahehe.
Yes.
5 yes, 4 excused. Is that right? Yep.